This is Equity Merchants. I'm Chimgozirim, bringing you stories of the capital flows driving Africa's development. On the news today, Moniepoint and Spiro secure major funding rounds to power growth. UAC finalises its acquisition of Chi Limited, and foreign investor activity on the Nairobi Securities Exchange drops to an all-time low. After a quiet spell, startup investing in Africa is showing signs of recovery. Last month, Nigerian fintech Moniepoint raised $90 million, bringing its total Series C funding to $200 million. The round included participation from Visa, expanding the payment giant's portfolio of African fintech investments. Meanwhile, electric mobility startup Spiro secured $100 million to accelerate its push toward cleaner transport across the continent. The company says it has already deployed 50,000 electric motorcycles across 6 African countries and plans to double that number to 100,000 by the end of 2025. UAC of Nigeria plc has completed its acquisition of Chi Limited, the maker of the popular Chivita and Hollandia brands. The company says transaction costs total 2.3 billion naira, or about $1.5 million, as it finalized a 100% equity deal on the 3rd of October 2025. Chi Limited is now a wholly owned subsidiary and will be consolidated into UAC's accounts from the fourth quarter. The acquisition contributed to UAC's first quarterly loss in nearly 2 years, with a 1.98 billion naira loss after tax for the third quarter, compared to a 4.13 billion naira profit a year earlier. Despite the setback, UAC's shares are up 111% year to date, valuing the group at 194.6 billion naira. Foreign investor activity on the Nairobi Securities Exchange has dropped to its lowest level in 15 years. Data from the Capital Markets Authority shows that foreign participation in equity trading fell to 28% in September, down from 31% in August, the weakest level since 2010. Over the third quarter, foreign investors sold 15 billion Kenyan shillings worth of shares and bought 11.7 billion Kenyan shillings worth of shares. This resulted in net outflows of about 3.8 billion Kenyan shillings, or $30 million. Despite the pullback, the Nairobi market recorded its strongest quarter in 4 years, with total capitalization climbing nearly 15% to 2.78 trillion Kenyan shillings, and all major stock indices posting double-digit gains. That's all for today. Thanks for watching. See you next time.